Okay, this week, the markets forged ahead. It was something like maybe Grant or Patton or David Farragut, who was the first admiral of the U.S. Navy with the famous phrase, "Damn the torpedoes, full speed ahead," when one of his ships under his command ran into a mine. And back in those days, torpedoes were anything like, well, this was during the Civil War, during were things like bombs and uh, booby traps and mines. Then obviously would be the other one. But this week, I mean, the markets pretty much ignored everything that has been happening and just kind of forged ahead. They were looking for a pullback at some point, but it hasn't happened yet, and so we'll just have to wait and see what price action tells us in the upcoming weeks. But right now, everybody feels like they're missing out. So every time there's a small pullback, people jump on. So let's start with the markets and looking at the Dow Jones Industrial Average. We saw this head and shoulders. We look like we're on our way up. Pull back, the pull under the neckline, fought our way back up, and this week was the week where we finally went through it. So the data that we're looking at here is our daily, and then these are the same data weekly. And you can see we came up to it. I thought maybe we get a pullback, but it just kind of blasted through this week, and we had the Dow Jones, finish up the week. Taking a look at transports, we were in this downtrend. We finally broken it this week. Also, these are weekly data. Excuse me. And so that's a good sign for the entire market. And I went through kind of my spiel about the transportation index. I don't think it's as important as it was back when we had railroads, but people beg to differ with that too. The S&P 500, weekly data again. We see this pretty, three decent sized candles, especially this first one, during the week of Halloween. And then this week was, like I said, a little bit unexpected that we go up here and start challenging, this area here. And then the Qs, which is primarily the NASDAQ. Companies, same three candles, strong, moves up. We've run into this resistance up here, but we're not far from the all-time high up in this area. And I've kind of, as we've gone along, I've put in some trends that I had. This one broke. This one is still respecting it. See if it breaks down here, and looking for this break above 387.42 to press to the all-time high, but you're only 17 points for, 17 points from 403.44, which is the all-time high for the Qs. Looking at IWM, it's the laggard. I am personally, this is the one I'm looking for some catch-up. I've been following it for a while, and we look at the breadth. We had a bit of a recovery in the last 3 weeks, but we're still under 50, and it backed off today. Looking at this, these are weekly. If we look at today, it backed off some, but we gapped up, but the breadth still isn't there, and that is more reflected in the Russell index, which are smaller companies for the most part, that are affected by things like interest rates. And speaking of that, the 10-year yield we broke this uptrend back in November, at the beginning of November. here on November 2nd. We had a gap down, and now we're kind of in this downtrend, and we've continued that pretty steep downtrend at this point. All the work it did to make its way up there and then get obliterated when it hit 5% on the 10-year. The dollar has started its decline also back in November, on November 1st, and we've continued our way down, respecting this trend line. We may go back up and hit this, in the next week or 2 weeks, but the trend is definitely down. Big red candle today, down candle. And the same thing we have going for crude oil, and these are all good signs for people paying less in gas and things of that sort, but it also means that our economy is starting to vibrate a little bit. We got huge problems that will eventually show up in the economy. So we had, we'd made our way down to a little over $72. We closed up today a couple bucks at 75. But if you look at this weekly, again, you can see we've had 4 weeks of downtrending oil prices. Could get a little bit of a kickback, but if you're going to do that, it's probably no more than up to this line. We may have started that today and then look for it to continue to pull back, making its way into the 60s. We got some support here at $69 and $65. The VIX continues to move downward since we had broke this uptrend all the way back down to where we were back in September. And we went through the MMT. Still, I was kind of surprised to see that we're still over 0.7 on the put-call ratio, which still indicates there's a lot of people in puts. So see how that plays, because it doesn't look very good from the standpoint. I'll put this up here, the Fear and Greed Index. People are more greedy, but it's not yet shown in the it's not reflected in the call put ratio. And so we're back in the greed component. Let's look at this on the timeline. Made our way up. Just continue to climb. See what, 82 or so. I mean, on up. If this thing continues, I think there's a sense of FOMO starting to build, which David Hunter predicted would happen at this particular juncture, and that's the reason why we're not seeing the pullbacks. And let's see what else we have this week on the economic calendar. We had 2 big things that really were the drivers of the markets this week that you always follow. Is core inflation rate came in 1/10 under what was the consensus was. Excuse me. And that core inflation rate at 4% came under. Again, the inflation rate, not core, which is everything, not excluding, food and oil, which is, I won't get into that. We still are under what was the consensus was on the inflation rate. Wednesday, we got the mortgage came in the same as last week, 7.61. We may look, since we're seeing the 10-year fall down, that what follows will obviously be the 30-year mortgage. We might see this continue to drop. PPI was a big number, but we got more reaction out of the CPI this week than we did the PPI. When the PPI came in at 0.5, I expected the markets to just explode, upwards, but it really kind of was like, okay, well, we already knew CPI was down, so we kind of expected PPI to be down. I don't know. But I thought there would be a lot more of reaction. Still up for the day, but not as, when that came out, I was anticipating the markets to really climb. core PPI came in at 0%, under the 0.3%. We also had, ancillary things like the New York Empire State Manufacturing Index, predicted to be negative 2.8, came in at an unbelievable 9.1, which is really strange to me. And then Thursday, we had the initial jobless claims come in a little hotter than expected. These are things that play into the Fed's thinking on whether they're going to raise the federal funds rate. And so that was kind of good news for Thursday. And then today we had building permits came in a little bit hotter, housing starts a little bit hotter. But really, the markets kind of shook it off and just kind of sat around for a while. When these numbers came out, the market barely moved. It moved a little bit down, and then it just kind of, where it was pre-market, stayed in that general range pretty much the entire day. And then as the afternoon kept going, the markets began to go back up. Tuesday, let's look at next week. Obviously Thursday's Thanksgiving, the markets will be closed. Not a ton on the agenda for markets from the economic calendar standpoint. We'll get FOMC minutes, which definitely could be a market mover depending on what they're talking about. Existing home sales, we have coming report. Durable good, or the mortgage rate number will come out. I'm looking for it to slightly tick down. Durable goods orders, expected to be down 3.2%, and we have the initial jobless claims predicted to be at 225,000. Durable goods orders sometimes can move the market. Initial jobless claims, I think people are paying more attention to that than the Michigan consumer sentiment, expected to come in at 60.5%. We just look at it real quick. It's been on this decline the last several reports. Friday, we have the S&P PMIs, global PMIs, so we'll get the composite and then the manufacturing and services portion, all just slightly above kind of the break-even point of 50. Expected manufacturing come in under the 50 number, mean contraction, and coming down in services to 50.3. So we'll see how those numbers play. There's really not a ton on there. Curious to see if the markets just kind of chill for a week. The next week, at the end of the week, we'll have the final week of November. We'll have PCE come out. That obviously could be a market mover. I don't expect it to be really anything more than what the CPI was, but we'll find out in a couple weeks. All right, so those are the economic calendars. My final comment, I went through it a little bit, but we look at some of these markets. We're very close to all-time highs. We got, roughly, what was the high? That's not it. Back here, $36,958, $56 in that range. As the all-time high, we're not that far off of these numbers for the all-time high. Just take it from here. We'd have to go up, 5.75% from where we sit right now. Still got to clear this here at 35,657, and let's look at the S&P 500. Very close. 48.18. We stand at 45.14. 300 points. We did that. From here to here. It was 413 points that we did, since late October to today. And you know, we're just not far off, and the Q's actually even closer, which has been the strongest index, mostly tech, at 403.44 is the all-time high. And again, let's get to the, how far did we end today? Roughly 4% below the all-time high. And then the Russell's the one that's the laggard. It's got a long ways to go, and this is where we need to see breadth in the market to make it all the way up there. And we're looking at 33%. So it's got a long way, a lot of catch up to do in order to hit that. So just one last comment is, if I were to look at David Hunter versus the Peter Schiff short term here, you can see that the two areas that they differ on are going to be the 10-year yield, or the yields in general, but 10-year more what I follow. Peter Schiff is expecting this to turn back up. They're both expecting the dollar to fall, but then Peter Schiff is expecting crude oil to go up. David Hunter has been saying it's going down. So right now, advantage David Hunter on the short term, getting this melt up and those types of things. Still got some work to do in order to get there. And we're really extended. I don't know if we'll get a pullback. I've read David Hunter saying we may not get until we get to the all-time highs. I think he's more talking about probably the Dow Jones and the S&P 500 and the NASDAQ, because the distance that IWM has to pull, even just to hit all-time high, 33%, that's quite a haul, to get up there. We get IWM up there, sorry. That's quite a ways to get to 237.56. I was stuck on crude. So we'll see how it plays out. It being the Russell has been relatively strong. So I guess my final comment is that I hope everyone has a wonderful Thanksgiving Day, and that we've got a lot going on in the markets right now, and I'm curious to see how this plays out the rest of the year. We have the Santa Claus rally, those types of things, and they usually come into play. So will we make all-time highs? Like I said, I think the Dow, the S&P, the NASDAQ all have good chances to get to their all-time highs, maybe even exceed it, while poor Russell index, a lot of work to do in the rest of November and December. So we'll see how they play. So anyway, that's what I wanted to cover this week. And remember, there's always a better way.